This is Blue Nile. Today we look into June 2014 Recorder Communications questions. Exam key points. 1. Audit risk. Inventory count. Risk of misstatements due to errors in counting, valuation, or cutoff issues. Directors' bonus payments. Risk of overstatement or unauthorized bonuses tied to manipulated financial performance. Ethical conflict of interest. Independence concerns if auditors have relationships with directors or conflicts affecting objectivity. 2. Audit procedures for inventory count. Attend the inventory count to ensure adherence to procedures. Perform test counts on selected items and compare to inventory records. Observe whether obsolete or damaged inventory is identified and accounted for. Verify cutoff by tracing goods received and dispatched near year-end. 3. Substantive procedures for directors' bonus payments. Review board minutes to confirm approval of bonus schemes. Recalculate bonuses based on agreed terms and supporting financial performance data. Verify payments to directors' accounts against payroll records. Confirm compliance with legal and contractual obligations. 4. Ethical conflict of interest. Identify any relationships between auditors and directors that may impair independence. Document safeguards in place, such as involving independent reviewers. Escalate concerns to audit committees if objectivity is threatened. Tailor responses to address risks comprehensively and prioritize professional ethics. We are going to look at a question called Recorder Communications. This question comes from the June 2014 exam and is for 20 marks. Included in the question are the following syllabus areas: audit risk, audit procedures on the inventory count, substantive audit procedures on the director's bonus payments, and ethical conflicts of interest. You must be careful with timing in the exam, especially with a question of this size. The volume of information in the scenario must be absorbed to ensure a pass. Therefore, aim for spending 1.8 minutes for every mark. This question should take you no more than 36 minutes. To successfully complete this question, you will need to plan your answer, taking care with the time allocated to each part of the question, use the scenario where needed, and have clear and efficient communication. It may be worth pausing the video at this point and printing off the exam question. That way you can follow the scenario as we talk through it. As with any question containing a scenario, it is important to plan the answer and use the information that has been provided. Reading the requirements before the scenario is important so you can identify what is needed from the scenario. This is crucial given the time you have in the exam. Let's now break down the requirements. Part A asks to describe 5 audit risks and explain the auditor's response to each risk in planning the audit of Recorder Communications. This question is for 10 marks, and therefore about 18 minutes should be spent on this part. The question asks for 2 things, the risk and also the auditor's response. There is 1 mark available for every well-explained risk, up to a maximum of 5 risks, and then 1 mark for each relevant response to each risk you've identified. The risks are outlined in the scenario, and therefore the understanding of the information is critical in passing this part. Part B asks to explain the audit procedures you should perform in order to place reliance on the continuous, perpetual counts for the year-end inventory. This question is for 3 marks, and therefore around 5 minutes should be spent on this. For 3 marks, you will need to explain 3 audit procedures that should be performed. Part C asks to describe substantive procedures that should be performed to confirm the director's bonus payments included in the financial statements. This question is for 3 marks also, and therefore 3 substantive tests are needed for maximum marks. Once again, around 5 minutes should be spent on this part. Finally, Part D asks to explain the safeguards which your firm should implement to ensure that this conflict of interest is properly managed. This refers to additional information provided above the question. 4 marks equals 4 well-explained safeguards and should gain maximum marks. Around 7 minutes should be spent on this part. Now we've had time to absorb the requirements of this question, let's begin to structure our answers. Part A. This is our audit risk requirement. As with every audit risk question, we are asked to describe audit risks and explain the auditor's response to each risk. In this question, we are expected to find and explain 5. The best way to structure this question is to answer both elements side by side on your answer paper. Set up headings clearly showing audit risk and audit response. Then run through the scenario, underlining or highlighting potential risks that you can use in your answer. The marks are allocated as followed. Half a mark to identify the risk from the scenario, so to copy the text will be 5. Then a further half a mark will be awarded if you can explain why it is a risk to the audit. This is the difficult bit, as many people are more comfortable talking about business risks to the client in question. The risk must relate to the auditor. So could it cause the auditor to form an inappropriate opinion? Does it cause a misstatement? Could a balance be overstated or understated? Could the disclosure within the financial statements be inadequate? It is this type of answer that will get the half-mark reward. The remaining 1 mark will be for the explanation of the auditor's response to the risk. This has to be a sensible approach the auditors would take to try and reduce the audit risk. Here are 5 audit risks for us to include. Recorder is a new client for P&O. They purchase goods from Southeast Asia and they are in transit for 2 weeks. There is a new bonus for sales staff, giving them a target of increasing customer sign-ups for 24-month phone contracts. The receivable levels are considerably higher this year, and there is a concern for the creditworthiness of customers. And they have revalued all land and buildings this year. We shall now outline what is needed for each point to get the marks. Recorder is a new client. This is an audit risk as the auditors may lack a fundamental understanding of the business and miss key information in identifying material misstatements. This increases detection risk. The auditor's response will therefore be to ensure the planning phase is longer, spend more time understanding the entity and its environment, and to include more experienced audit team members so they can deal with issues in a speedier manner. Recorder purchased goods from South Asia, which are then shipped and arrive after 2 weeks. This is an audit risk because the delay in receipt of goods could cause errors in cutoff of payables and purchase transactions. Only goods actually received should be recorded in these balances before the year end. The auditor's response should be to increase sample sizes for cutoff testing for purchases from South Asia to identify if the recording of goods in transit at the year end is accurate. Recorder have introduced a new bonus scheme for their sales team. This is awarded for an increase in customers signing up for the 24-month contracts. This is an audit risk, as it encourages sales staff to include sales contracts that actually relate to the following year to ensure their bonus is higher. It could also potentially encourage fictitious contracts to be included to increase their sales. The auditor's response should be to increase cutoff testing over sales made for the 24-month contracts. They should also review any cancelled contracts after the year end and compare to the previous year. The receivable levels are considerably higher this year, and there is a concern for the creditworthiness of customers. This is an audit risk, as it suggests there could be bad debts that have not been adjusted. This means that the receivables balance could be overstated, along with the profit for the year. The auditor's response should be to perform analytical procedures on the receivables balance. Inspect the aged receivables list, and investigate any slow-moving and old balances with the client to decide if adjustments are needed. They should also review the allowance for receivables and consider whether the balance is adequate. Finally, Recorder have revalued all land and buildings this year. This is an audit risk as the adjustment to the land and buildings balance may not be in accordance with IAS 16, the Property, Plant and Equipment Standard. The balance could now contain a material misstatement, and the disclosure in the financial statements on this could be inadequate. The auditor's response should be to compare the process of the revaluation carried out by the client to the IAS 16 standard. This should be done by inquiry with the client management. They should identify if an expert has been used to conduct the valuation. All 5 audit risks have now been fully explained, along with the suggested audit response. There were more audit risks within the scenario, which could also have been included in your answer. I recommend you review the suggested answer on the ACCA website in detail to ensure you have seen as many audit risk ideas as possible before you complete your exam. Part B was to explain the audit procedures you should perform in order to place reliance on the continuous perpetual counts for the year end. There is a brief mention in the scenario of continuous inventory counting carried out by Recorder Communications. It states that counting is carried out monthly, and any errors are adjusted in the inventory system for that month. We have very little from the scenario to help us, which is typical of these audit procedure questions, and we have to think of 3 audit procedures to carry out. Remember, an audit procedure should be a clear instruction of what the auditor would carry out and why. It should contain enough detail of what should happen, otherwise the marker is unlikely to be able to award the whole mark. The auditor should perform the following on the inventory count for Recorder at the year end. The auditors should attend a sample of the monthly inventory counts. While present, they should review the controls over the count and ensure they are happy they are adequate. They could also consider attending the final month inventory count at the year end, June 2014. This would enable them to test for potential misstatements by counting a sample of inventory in the warehouse and agreeing to the inventory records. Then, also for the sample of items on the inventory records, find in the warehouse and recount and agree to what was recorded. The auditors should ensure that each product line has been counted at least once in the year. The monthly count sheets should be reviewed and compared to the product list, and any products not included should be flagged up to the client. Each of these procedures are relevant to the audit of a continuous inventory count, and therefore would give you a mark each. Part C is to describe substantive audit procedures you should perform to confirm the director's bonus payments included in the financial statements. This relates to the scenario again where they told us that each director had been paid a significant bonus, which has been included in wages and salaries, but separate disclosure of the bonus is required by local legislation. It is for 3 marks, therefore 3 audit procedures needed. Again, they must be clear but detailed substantive procedures. The auditors should perform the following procedures on the bonus in question. They should obtain a schedule of directors' pay, including the bonus, and add this up to confirm accuracy of the balance. They should then agree the bonus in the schedule agrees to the payroll records by matching the individual amounts for each director to the payroll system. The auditors should then confirm they have been paid these amounts by agreeing the individual bonus amounts on the schedule to the bank statements and cash book. Remember that substantive audit procedures are to identify potential misstatements in the financial statements. Here, we're trying to establish whether the bonus payments have been recorded properly. Finally, Part D was to explain the safeguards which your firm should implement to ensure that this conflict of interest is properly managed. This related to the scenario above this requirement, which explained that P&O also audit Recorded's main competitor and Recorder's director wants to know how they plan to keep client information confidential. This was for 4 marks, and we therefore needed 4 explained safeguards. Remember, the auditors must keep client information confidential, as this is one of the ethical fundamental principles followed by the profession. Where a conflict of interest is present, the auditors must inform both clients of the conflict and must have agreement from both parties before they can continue. Each client should be recommended that they seek independent advice before they continue. If both the clients agree, then the audit firm must ensure that they have separate engagement partners and separate teams for the audit work to be completed. If possible, separate offices should deal with each client. The auditors who are involved on either team could also sign confidentiality agreements to reinforce the importance of keeping client information confidential. Other controls, such as a focus on physical security of client information, locking client files away, and encrypted passwords on computer systems, should be in place. Training on confidentiality and its importance would also benefit the audit firm. Each of these would give you a mark on a question such as this one. If the audit firm cannot provide these safeguards, then they should not act for at least one of the clients. This 20-mark question has covered some key areas of the audit and assurance syllabus. Please remember, to be successful in this type of question, we need to plan the approach and ensure we have identified how long is needed for each part. Use headings to introduce your answers and space out your points so it is clear for the marker where the marks can be allocated. Finally, if there is a scenario, use it. This information was given to you for a reason, and at F8 they are trying to see if you can apply your knowledge to a given scenario, and not just be able to remember the facts. I hope you found this video useful. Thank you, and good luck.